Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex.
Chicago soybeans. 2 weeks ago I highlighted a new view of what I thought was an earlier pattern, no longer a very large double bottom pattern, instead a July 24 to date rectangle pattern, currently 951 to 1094, highlighted in bright pink on my daily chart. The top side for this pattern is still capped by the 50% Fibonacci line of the May to August 24 move at 1098 and the 61.8% absolute Fibonacci line at 1106. Separate to this, I brought up 3 weeks ago the idea of a February to date descending wedge pattern, highlighted in bright green on my daily chart. My comments from 3 weeks ago included, and I quote, "A break from this pattern, when it comes, could be very interesting, as if it were higher than the 50% Fibonacci line and the 61.8% absolute Fibonacci line overhead would be under threat, whilst the break lower would run into the congestion seen mainly between mid-October 24 to mid-January 25 in the 990 zone, assuming of course it pushes past the dark blue neckline extension, that's currently at 1018, of the late July to late August reverse head and shoulders pattern," end of quote. Well, 2 weeks ago, and again last week, we had a break lower and prices dropped down to 991 and 994 respectively. The first easily within the influence of what I had said was and I quote, "the congestion seen mainly between mid-October 24 to mid-January 25 in the 991 zone," end of quote. And the second, well, possibly within the sphere of the same influence. However, with changeover, we are back up testing from the top side now, the combination of the flatlining mauve medium moving average, currently 1020, and the dark blue neckline extensions. Now, we have left a sort of mini double bottom formed over the last 2 weeks, but I'm not designating it as such yet because I suspect we may extend that into a possible bearish cat's ears pattern. So I'll leave it for now. However, the 990 support is worrisome for anyone looking on the downside. I say this because the primary target on the downside for the small bright green descending wedge pattern has already been achieved, as it wasn't too far below the break lower down at the 1011 level. However, the secondary harder to reach target X is down at 966, below the key 990 level and just above the purple uptrend, currently 958 of the 2019 today uptrend, and the more recent pink August 24 today uptrend, currently at 951. I think a lot will depend on whether the market manages now to move back below this dark blue neckline. However, overall, we are still well within the large July 24 to date rectangle pattern right now. Chicago soybean meal. The main recent pattern driver here in this market had been, and still is, just about is, the dark blue May to October bearish shift pitchfork. And just over, the market is running for a third time at just over and just under the now overhead upper time, currently 307.20. This pattern had previously been breached on the upside in January, but it had not been broken, and it had then also been reinforced by a congestion area further overhead between 323.30, 326.90, as well as a declining gold long moving average, currently 314.60. This week with changeover, prices opened over the dark blue upper time, but the gold long moving average did a splendid job of capping the rise this past Monday. And we closed back within the bearish shift pitchfork yesterday, and it looks like we're going to be doing that today. We are mostly within this pattern again, as well as under the green short medium moving average, currently at 306.90. Below we have the mauve medium moving average, currently 301.90, which originally was a bearish presence, but may now seemingly be changing into a possible support. Now, 5 weeks ago, prices dropped down below the interesting bright green mid-December 24 to early February 25 lower bull channel line, come lower trend line to an ascending wedge pattern. That trend line is currently at 323.90 plus below the purple lopsided head and shoulders pattern neckline, currently at 322.10. I said 3 weeks ago, and I quote, "sets up some opportunities on the downside For an ascending wedge pattern, there is a primary target X down in the 293.80 zone and a secondary hardest reach target X1 down in the 265.60 zone. For a head and shoulders top, we have a primary target X2 down in the 293.30 zone and a secondary hardest reach target X3 down in the 280.10 zone. End of quote. I further added, and I quote, "Looking at the targets, the primary targets X and X2 are doable, but still within the congestion seen back in April to August 2020 between 282 even to 300 even. And again most recently in November and December last year. However, the secondary targets for both are below this congestion and thus harder, much harder to attain." End of quote. 2 weeks ago, upon reflection, I added an interim target X4 in the 285.30 zone below for the ascending wedge pattern. And 2 weeks ago also we saw both target X and target X2 both achieved, followed by a reactionary move back up. This move back up created a weekly key reversal up, and last week for most of the week we had a reactionary pullback lower to this original move back up. However, last Thursday saw a reassertion of the move higher and the gapping changeover, reaching up this past Monday. I said last week, and I quote, "By doing so, we have over the last 2 weeks set up the opportunity for a possible 2-week-old bull flag, with potential up as far as the target X5 or just under it in the 315 even area. This is not a done deal and would very much depend on what happens today and tomorrow, so that's back then." End of quote. Well, we peaked last Monday at 314.80. Close enough for me to say that prices have reached target X5 in the 315 area. Now, I said 2 weeks ago when we were discussing the weekly key reversal last week that if it was an up, then I would, and I quote, "most likely retire both secondary targets below as well as the new interim target." End of quote. Well, last week I kept all 3 targets still on my daily chart, but put them under notice. This week, I will maintain the status quo. The targets remain below, are still there, but they are still under notice of retirement. Finally, this commentary would not be complete without my discussing the elephant in the room, or at least the elephant in the room which has stayed there throughout 2024 and also resonates now into 2025. And that is the annual key reversal seen here at the end of 2023. I said, and I'm afraid I have to repeat something I've highlighted now for 91 weeks, so coming up for nearly 2 years, and I quote, "I now only need to remind you once again of my words when I pointed out the Chicago soybean meal was about to make that rarest of patterns an annual key reversal down. This duly came about at the end of 2023, and we have been living in the shadow of this pattern ever since." End of quote. I've also added ever since, and I quote, "If there is only one thing you take away from my musings, let it have been those words." End of quote. These last few weeks have shown that the shadow cast by that supremely significant pattern so long ago still darkens the skyline of this market today. Chicago soybean oil. A somewhat clearer chart this week than compared to 2 weeks ago. I've now fully retired the mid-August to late December 2024 bullish Andrews pitchfork, and instead the main pattern here is now the bright red shallow bullish shift pitchfork for the same move. The market is right now in between the bright red lower tine below, currently at 40.42, and the bright red middle tine above, currently 45.53. Now with changeover, we have seen a gap higher and a further move up over the overhead congestion at 42.52 and 42.67, being the May and April 2024 lows respectively. The move up was unsurprisingly capped on Tuesday by the overhead flatlining gold long moving average, currently at 43.46. And we've headed lower since. And looking below, we have congestion at 41.15, as we had last week. Now, as I've pointed out extensively in my video commentaries, the market has seemingly decided upon a huge, large-scale June 2024 to date triple top, offsetting what could have been a huge June 2024 to February this year, 2025, double bottom. What we are left with now is just the main pattern, the bright red shallow bullish shift pitchfork. That's the main runner now, at least for now.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.